Green stocks are seeing records in the world's biggest trades, and our next guest thinks some companies are well positioned to go through short-term headwinds but offer long-term opportunities. For more on this, we're joined by Hua Cheng, portfolio manager at Mirova US. Well, thank you very much for joining us.
Happy to be here. Good morning, Roger.
Let's talk a little bit about your optimism. Why are they surging this year?
We believe that there are several reasons behind its recent strong performance. First of all, the market expectation at that time was really low. Second, there has been more and more clarification on regulations, and regulations are much better than initially expected. And third, the fundamentals of renewables is very strong.
And there have been concerns about what might happen south of the border, but we're even seeing a pullback a little bit up here. Yet our business is seeing the opportunities and saying there's money to be made in this?
We believe that there are still long-term opportunities, even after its recent rally. On the one hand, we believe that the fundamentals are strong because the long-term growth for power demand in the US is going to be several times higher than the past. On the other side, we believe that renewable energy is very well positioned, has key competitive advantages against others. On the other side, we believe that the valuation of the sector is still reasonable.
So this sector usually gets caught up in politics, and that seems to be one of the things that investors focus on, is just what's coming out of President Trump or just the politics around this. Are there any other technology issues around this? Or are we seeing any issues that the companies are running into?
Yeah, definitely we saw that in short term, regulation uncertainty could be a potential headwind for the volatility or short-term performance. But over long term, we believe that fundamentals matters really. For example, the demand and supply relation, whether the cost is competitive, reliability, availability of the energy, etc. We believe that renewable energy is very well positioned because it's much cheaper after its cost significantly fall due to improvement of technology, but also because it can be much quicker to expand its capacity over the next 12 or 18 months instead of 3 or 5 years. It's available. So for all these reasons, we believe that fundamentals are still very strong for renewable energy over the long run.
Any concerns that it's there's been talk that China has kind of taken over the green wave and taking control of it. Any concerns that they're trying to play catch up in the US and they might not?
Yes, definitely. We believe that this is a very important question for the long-term opportunities. We believe that the government here takes the measure to protect the local supply chain of renewable energy. We believe that in short term, regulation, tariffs are important, but again, the bottom line is that for the long term, fundamentals matters even more.
It's a pretty broad topic within looking at renewables. Do you have a pocket that you favor more, whether it's solar or wind or geothermal?
Yes, we believe that there are different ways to invest in this area. On one hand, the first category is the pure players on renewable energy. The second category is more diversified industrial companies or utility companies. We see different advantages or disadvantages of each category. For example, for the first category of renewable, it could be potentially volatile because of all the external factors such as regulation, supply chain disruption, etc. For second category, it can be more diversified and then offer perhaps attractive risk and reward. In our portfolio, we believe that there are good high-quality names in each category.
Okay, well, thank you very much for joining us today. We appreciate it.
With pleasure.
Hua Cheng is the portfolio manager at Mirova US, and we were talking about green stocks and the surge they are seeing.